Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called VWAPRSI Reversion. This is a mean reversion strategy. It watches for moments when price stretches unusually far away from its rolling volume weighted average price, and it studies the relative strength index to judge whether that move has run out of steam. By the end of this video, you'll understand how the entry conditions stack together, how the stop and target are placed, and how the whole idea plays out on a chart. Just remember, this is for educational purposes only. So what exactly is VWAPRSI Reversion, and who might find it interesting to study? At its heart, this is a mean reversion expert advisor. Rather than trying to ride a trend, it looks for moments when price has stretched unusually far from a fair value reference, and it studies the conditions for a possible move back toward the middle. The name itself tells the story. VWAP stands for Volume Weighted Average Price, and RSI stands for Relative Strength Index. The strategy combines the two. The VWAP acts as the fair value anchor. It's a rolling average that gives more weight to bars where more activity took place, so it tends to sit where the market has agreed on value. Around it, the strategy draws standard deviation bands that show how far price has wandered from that anchor. The RSI then acts as a second opinion, a gauge of whether momentum has become stretched in the same direction. This particular EA can be attached to any symbol and time frame in MetaTrader 5 because it reads only price and volume from the chart it runs on. It's often discussed in the context of ranging or balanced markets, where price oscillates around a value area rather than trending strongly in one direction, since that's the environment mean reversion ideas are designed around. In terms of who studies a strategy like this, it tends to appeal to traders who are curious about counter-trend and fair value concepts, and who want to see how several filters can be combined so that no single reading acts alone. Throughout this video, please keep in mind that everything here is shared purely for education. It's an analysis of how the code behaves, not financial advice, and not a recommendation to trade. As always, trading carries real risk, and losses can and do happen. Let's break down the mechanics step by step. The strategy works on a bar-by-bar basis, meaning it makes a decision only when a candle has fully closed, never in the middle of a forming bar. On each newly closed bar, it first looks back over a window of bars set by the VWAP period, which defaults to 50. Across that window, it builds a rolling volume weighted average price, blending each bar's typical price with its tick volume to find where the market has been doing most of its business. That VWAP becomes the fair value reference. Around that VWAP, the strategy measures the standard deviation of closing prices and projects two bands, one above and one below, at a distance set by the band multiplier, which defaults to 2. These bands describe how far price would normally wander from fair value. A close beyond a band signals an unusual stretch. The strategy then checks two more readings on that same closed bar. The first is the Relative Strength Index, using a period of 14 by default, which gauges whether momentum has become overextended. The second is the Average True Range, also 14 by default, which measures current volatility and is used purely to size the stop. For a long or buy, three conditions must all line up on the closed bar. Price must close below the lower band. The RSI must be beneath the oversold level, which defaults to 30. And the bar itself must be bullish, closing higher than it opened, acting as a reversal signal. When all three agree, the strategy signals a buy. The target is set at the VWAP, the fair value line price is expected to revert toward, and the stop is placed below the entry at 1.5 times the ATR. For a short or sell, the conditions mirror exactly. Price must close above the upper band. The RSI must be above the overbought level, which the code calculates as 100 minus the oversold input. So with a default of 30, the overbought line sits at 70. And the bar must be bearish, closing lower than it opened. When those agree, the strategy signals a sell, again targeting the VWAP, with the stop placed above the entry at 1.5 times the ATR. One more rule keeps things tidy. The strategy allows only one open position at a time for its magic number, so it steps back once a trade is live and lets the stop and target manage the outcome. Every trade carries risk, and losses are simply part of trading. Let's look at the actual MQL5 code that runs inside MetaTrader 5. At the top are the input parameters, the settings you can adjust in the EA's properties. VWAPPeriod, defaulting to 50, sets how many bars feed the VWAP calculation. BandMult, at 2, controls how wide the standard deviation bands sit. RsiPeriod and RsiOversold, at 14 and 30, define the RSI and its oversold level, and the overbought level is simply 100 minus that number. AtrPeriod and AtrSlMult, at 14 and 1.5, control the volatility-based stop. Lots sets the trade size, and magic tags the EA's own positions. Below the inputs, you can see the strategy build its decision. It first defines a bullish candle as one whose close is above its open, and a bearish candle as the opposite. Then it forms the two signals. The long signal is true when the close is below the lower band. The RSI is below the oversold level, and the candle is bullish. The short signal is true when the close is above the upper band. The RSI is above the overbought level, and the candle is bearish. Now look at the buy block. When the long signal is true, it reads the ask price for entry, sets the stop a multiple of ATR below that entry, and sets the take profit right at the VWAP. A quick sanity check confirms the levels make sense, then trade.buy sends the order. The sell block is the mirror image. It reads the bid price, places the stop a multiple of ATR above entry, targets the VWAP again, validates the levels, and calls trade.sell. Both sides share the same fair value target and the same volatility-based stop. Let's bring the whole idea to life on this chart. What you're looking at is an illustrative example, not a live trade, designed to show how VWAPRSI Reversion reads the market. Running through the middle of the price action is the gold VWAP line, the volume-weighted average price. Above and below it sit two blue bands, placed at a multiple of the standard deviation of price around that VWAP. With the band multiplier set to 2, those bands mark how far price has stretched from fair value. Below the candles is the relative strength index, with reference lines drawn at 30 and at 70. Watch the first couple of candles. Price is hovering close to the VWAP line, calm and balanced, and the RSI is sitting in the middle of its range. There's nothing for the strategy to do here, because price is near fair value. Then the mood changes. Over the next two candles, price slides lower, pulling away from the VWAP and pressing down toward the lower band. As it falls, notice the RSI dropping with it, sinking toward that 30 line. Now the key candle forms. Price closes below the lower band, a sign the move has stretched well beyond its normal range, and at that same moment the RSI has dipped beneath 30 into the oversold zone. On its own, an overextended market can stay stretched, so the strategy waits for one more piece of evidence. The very next candle, which makes a fresh low but then closes higher than it opened, is a bullish reversal bar, hinting that sellers are losing their grip. That combination, a close beyond the lower band, the RSI beneath 30, and a bullish candle, is exactly what the strategy is built to detect, and the buy entry marker appears. From here the logic is simple. The target is the VWAP line itself, because the whole premise is that stretched price tends to drift back toward fair value. The protective stop is placed below the entry, a distance of 1.5 times the ATR, which adapts to how volatile the market currently is. Follow the next two candles as price lifts off the low and climbs back toward the middle. When it reaches the VWAP line, the take profit marker prints, and the long idea is complete. Now the chart shows the mirror image. Price keeps pushing higher, this time climbing above the VWAP and stretching up toward the upper band. The RSI rises with it, pressing past the 70 line into the upper zone. A candle closes above the upper band while the RSI is above 70, so price is once again stretched far from fair value, only now to the upside. The strategy still asks for confirmation, and the following candle, after tagging a fresh high, closes lower than it opened, a bearish reversal bar. With the close beyond the upper band, the RSI above 70, and a bearish candle, the sell entry marker appears. The exits work the same way in reverse. The target is the VWAP line, the fair value anchor price is expected to fall back toward, and the stop sits above the entry at 1.5 times the ATR. Trace the final candles as price rolls over and eases back down. When it touches the VWAP line, the take profit marker prints, and the short idea is complete. Notice the rhythm across both trades. The strategy never chases price in the direction it's already running. It waits for an extreme beyond a band, asks the RSI whether momentum is exhausted, and only acts when a reversal candle agrees, always aiming back at that same fair value line. That patient, three-part confirmation is the core of how this approach is designed to behave. And that wraps up our educational walkthrough of the VWAPRSI Reversion Expert Advisor for MetaTrader 5. We covered what mean reversion means here, how the VWAP and its standard deviation bands define fair value and stretch, how the RSI confirms an overextended move, and how a reversal candle gives the final confirmation before the strategy signals a buy or a sell, always targeting the VWAP with an ATR-based stop. Everything in this video is for educational purposes only. It is not financial advice, and it is not a recommendation to trade. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like to see next, and subscribe for more MT5 strategy analyses. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.